Hi everyone, this is the series of lectures for ATT UK's UAE VAT Diploma. We are on chapter 5 now, which addresses zero rating of supplies. So, as the name suggests itself, there are certain supplies which are taxed at the rate of 0% under the UAE VAT law. So certain articles such as Article 45, uh, they specify and they address the zero rating. Zero rating supplies are included in the VAT registration threshold calculation as well to ascertain whether the registration limits have been exceeded or not. Why? Because zero rating is also one of the two categories of taxable supplies, the other one being standard rated supplies. A taxable person making exclusively zero-rated supplies can apply to be accepted. Here, this accepted is with EX, like by way of an exception. Can be, may apply for an exception from VAT registration according to Article 15 of the VAT law. Because that person is already making entire supplies as zero-rated, so that person might think that, okay, there is no point in claiming the input tax benefit, and instead you going for the exemption. So taking an exemption from registration, exception from registration, but that person would not file returns, etc. If the person opts to apply for this exception, the first person would not be entitled to recover input VAT incurred under the normal tax return process. UAE VAT law and the regulation, what do they say about it? Goods and services listed in Article 45 of the VAT law are zero rated if all the relevant requirements are met. The key categories of zero rated are export of goods and services to outside the implementing states, which are uh, three states other than the UAE, three GCC states other than the UAE, which is Saudi Arabia, Oman, and Bahrain. Qatar, Kuwait have not implemented VAT yet. They're not the implementing states. Only these uh, three states plus UAE, four are implementing states. So if you are exporting anything outside these four states, meaning outside these three states, be UAE from UAE to outside these other three states, Oman, Bahrain, and Saudi Arabia, then you can then these exports will be zero rated. Second, international transport of goods and passengers and transport related services. These will also be zero rated. That's why in the previous chapter we saw insurance also. Insurance related to this international transportation as zero rated. Certain precious investment metals, gold, silver, platinum, etc. The the supplies of these will also be zero rated. First, supply of residential buildings and buildings specifically designed to be used by charities. So, for residential building, only the first supply, but those buildings that are designed to be used by charities, the supply of those buildings, these will be zero rated supplies. Crude oil, natural gas, certain educational services, not all, but certain educational services, preventative and basic healthcare services, and related goods and services. All of these are examples and categories of the zero rated supply. Now, exports of goods and services from the UAE. So, Article 1 of the VAT law defines on export as goods departing the UAE or the provision of services to a person whose place of establishment or fixed establishment is outside the UAE. The export of goods and services is one of the categories subject to zero rating under Article 45. provided that the relevant conditions and requirements are met. We are going to now address the requirements for each of these two. What are the requirements for export of goods and what are for export of services? So first, export of goods. An export of goods can be either a direct or an indirect export, depending on whether the transport is arranged by the supplier or by the recipient of the goods, the recipient of the goods. A direct export is an export of goods to a destination outside the implementing states. So this is a direct export of goods where the supplier is responsible for arranging transport or if they appoint an agent to do so on their behalf. That's the direct export of goods. An indirect export is an export of goods to a destination outside the implementing states. So an indirect export is an export of goods to a destination outside the implementing states where the overseas customer is responsible for arranging the collection of the goods from the supplier in the UAE and who exports the goods themselves or if they appoint an agent to do so on their behalf. So that's a very interesting scenario. In first scenario, the seller, the UAE seller, was arranging the transportation also for the goods that they sold. Transportation all the way to the export point of you know destination. But in the second scenario, the buyer is organizing the transportation for the goods that they purchased. So that's called an indirect export. This distinction is relevant mainly because the conditions for zero rating differ based on whether the export is direct or indirect export. Now let us see what are those differences. A direct export will be subject to zero rated provided it meets the following conditions. The goods are physically exported to a place outside the implementing states or are put into a custom suspension regime in accordance with GCC common custom law within 90 days of the date of the supply. So if so as we were discussing the first category, which is a direct export, so either the goods are physically actually exported to a place outside the implementing states or they are put into a custom suspension regime in accordance with GCC common customs law, but that must happen within 90 days of the date of the supply. Uh, Now, this is another very interesting question. What is the date of the supply? So again, there are different trigger points for that to determine what is the date of the supply. Is it the date of raising of the invoice, date of the payment, date of the actual delivery? You know, there are rules around it. So, but based on the date of the supply, uh, with after the date of the supply, within 90 days, that this transaction, these goods must enter into custom suspension regime in accordance with the GCC Common Customs Law. The exporter must retain the any of the following: uh, a customs declaration and commercial evidence that proves the export. So there is export proof of export is needed, customs declaration or commercial evidence, or shipping certificate and official evidence that proves the export. So naturally, I mean, either there'll be a customer declaration or at least there will be some shipping certificate or official evidence. Then a custom declaration that proves the suspension arrangement of custom duties in case the goods are put into custom suspension. So that custom declaration, which evidences that now, yeah, these goods were made part of the custom suspension regime. Now, what else? On the other hand, an indirect export is subject to zero rate, provided it meets the following conditions. What conditions are there? The goods are physically exported to a place outside the implementing states or are put into a custom suspension regime in accordance with the GCC common custom law within 90 days of the date of the supply under an arrangement agreed by the supplier and the overseas customer of at or before the date of the supply. So uh, there was an arrangement, there was an understanding between the buyer and the seller that, okay, as soon within 90 days of the date of the supply, we will put the goods into custom suspension regime. That was one alternative. Or the goods are actually transported outside the implementing states by the buyer, because in the case of indirect exports, it is the buyer who's arranging for the transportation. So that was the first thing. Then what else? The overseas customer or its agent obtains any of the following and provides the supplier with a copy. Now, in this particular case, supplier has to be informed actually. So if the supplier is not provided with the evidence, then he will not be able to zero rate this transaction. So, a lot depends on the overseas customer who's required to provide certain evidence to the supplier. What are those evidence? A custom declaration and commercial evidence that proves the export. So naturally, custom declaration or commercial evidence. And then second category is shipping certificate and official evidence that prove the export. And third category, custom declaration that proves the suspension arrangement of customs duties in case of goods are put into customs suspension regime. If you really think about it, until this point, nothing is different between direct and indirect uh, export. Let's read the next 2 points for indirect export. The goods are not used or altered in the time between supply and export or customs suspension, except to the extent necessary to prepare the goods or goods for export or custom suspension. So this is a new point. This is a point that was not addressed in direct exports, but it is only there in case of indirect exports. The goods are not used or altered in the time between supply and export on customs or supply and export or customs suspension, except to the extent necessary to prepare the goods for export or customs suspension. So, or everything agreed, date of supply also fixed, meaning either payment came or the invoice was raised or, the goods were made available. And that from the date of the supply and between to the point that the goods were either actually exported outside implementing states or they were made part of the custom suspension regime, it can take some time, 1 week, 2 week, depending on, as many days. Maximum time allowed is 90 days. So within this time, the goods must not have been altered. Some major processing must not apply, right? Or the maximum that is allowed is to prepare the goods to make them ready to the extent necessary for preparing the goods for export or custom suspension. It will be basically slight modification, maybe like packaging, maybe, or something else, but severe alteration or consumption is not allowed. Then what is the last point? The goods do not leave the UAE in the possession of a passenger or crew member of an aircraft or ship. goods do not leave the UAE in the possession of a passenger or crew member of an aircraft or ship. That's a very interesting angle that the goods cannot leave UAE in the possession of passenger or crew member of an aircraft or ship. If that happens, then the zero rating will not be available. The term overseas customer is defined in Article 1 of the VAT Executive Regulations, which states that an overseas customer is a recipient of goods who does not have a place of establishment or fixed establishment in UAE. So in short, in easier words, the customer is not living in UAE, does not reside in the UAE, and does not have a tax registration number. And as a matter of fact, that overseas customer should not also have a UAE TRN. A registrant may only apply the zero rate under Article 45, uh, Clause 1 of the VAT law, uh, read with Article 30 of the regulation. If the person retains both the required official evidence and commercial evidence. So official evidence, commercial evidence, meaning the shipment or the or the customs declaration, etc., to prove that the goods actually left the UAE. The evidence must identify the supplier, consignor, goods, value, and export destination. So all the information must be available. If any of these particulars is not uh, made available or not procured in the first instance, and the seller treats this as a zero rated transaction, it will be considered as the fault of the seller, because if he does this knowingly, this is willful misrepresentation and not collecting the uh, standard rated VAT from the customer. The term official evidence means the export certificate issued by the customs department in the UAE, or a clearance certificate issued by these departments or by the competent authorities in the UAE regarding the goods leaving the UAE. Offer verifying these after verifying their departure from the UAE, or a document, a clearance certificate certified by the competent authority in the country of destination, stating the entry of the goods into the country. And please remember that this point has come with an or, meaning it can be alternatively the point of destination where the goods are going. Their authority can also issue such a certificate. That was official evidence. That was official evidence. Now we're coming to what is commercial evidence. The term commercial evidence refers to the document issued by sea, air, or land transport companies and agents, which prove the transfer and departure of the goods from the UAE to outside the UAE, and include any of the following: airway bill or air manifest, seaway bill or sea manifest, landway bill or land manifest, naturally bill of lading, etc. Additionally, the term shipping certificate refers to a certificate issued by sea, air, or land transport companies and agents as an equivalent of a commercial evidence where it is not available. Uh, Article 30, Clause 4 of the regulation addresses this point. The term shipping certificate refers to certificate issued by sea, air, or land transport. Now, the FTA may decide not to accept the document submitted if they do not constitute sufficient evidence of the exit of the goods from the UAE, and may specify alternative forms of evidence according to the nature of the export or the nature of the goods being exported. This can be applied for by the exporter by way of an administrative exception. So, FTA might require additional documentation, and if they and that's where the there might be there's a form which is called administrative exception. So I think there is a leeway provided to the exporter and may specifically alternative forms of evidence according to the nature of the export on or the nature of the goods being exported. This can be applied for by the exporter by way of an administrative exception. So basically, exporter can request that, okay, so since you're not accepting the original document, we are providing an alternative. So for that, we are using the form called administrative exception. The supplier may request an administrative exception for the extension of the time to physically export goods between the expiry of the 90-day period through the Emara tax portal. So, that there was a 90-day period mentioned, right? That within 90 days of the supply, they have to enter into custom suspension regime or export it. So the F that if the supplier feels that it is practically not possible to achieve this within 90 days and there will be more time spent, they will need to use that administrative exception form. The FTA can extend the 90-day period from the day of supply if the FTA has determined after the supplier has applied in writing that either of the following applies. First thing, circumstances beyond the control of the supplier and the recipient of the goods have uh, prevented or will prevent the export of the goods within 90 days of the date of the supply. So first circumstance that, circumstances are as such that the export cannot happen or the custom suspension cannot be triggered before 90 days, beyond the control of the supplier. Uh, or the second scenario, due to the nature of the supply, it is not practicable for the supplier to export the goods or the class of goods within 90 days of the date of supply. It could be maybe some sort of a agricultural product which may require ripening, for example. That's just an example, or some other thing, or a physical state change, etc., which can happen only after beyond 90 days. Those could be scenarios where an administrative exception may be triggered or applied. Where the supplier fails to export the goods within 90 days of this extended period approved by the FTA, the supply would be subject to tax rate that would have been applicable if the supply was made in the UAE, which is actually, I mean, it can be in majority cases, it will be standard rated, which is 5%. It could be other than 5 as well in certain rare circumstances, zero rated. Export of services. With regard that's a relatively easier one. So with regard to services, the regulation states that the export of services would be treated as zero rated in the following cases. Which cases? If the following conditions are met, first, the services must be provided to a person who does not have a place of residence in the implementing states. So the customer must be living outside four countries. It must not be living in UAE, Saudi Arabia, Oman, or Bahrain, and who is physically outside the UAE when the services are performed. And the person also has to be outside of UAE. A person is treated as being outside the UAE if the person has a short-term presence in UAE of less than a month and their presence is not effectively connected with the supply. So the person was just, passing by or visiting for a very short time, less than a month. Then it will be considered as, okay, this person was hardly in UAE, so it will be seen or deemed as if the person was out of UAE. In determining whether these conditions are met, the supplier must consider all available facts in order to identify the residency status and the location of the recipient. So it is the supplier who has to take care about whether you should treat these services as zero rated or standard rated. Because if the supplier is not a non-resident for UAE VAT purposes, then there may be problems. Then where the recipient has multiple establishment, the supplier must also determine which establishment of the recipient is most closely related to the supplier. Now that's another very tricky area. The buyer has multiple establishments. He's based in multiple countries. Then it has to be seen where, like, which is the place of primary abode or vital economic interest, etc. So from that point of view, it will be identified whether the person was within one of the implementing states or outside. Whereas if recipient has several establishments in different countries, place of residence of the recipient must be considered to be the country in which the recipient's place of establishment, fixed establishment, most closely related to the supply of services being made is located. Now that's a very interesting angle you need to remember. So, uh, what was the type of services being supplied? So which of the countries uh, fixed establishment or is going to benefit the most out of that particular type of service, right? So that has to be asserted, and from that perspective, it will be seen whether the uh, whether the services were being supplied to a place outside the implementing states. The services are not supplied directly in connection with real estate situated in the UAE. Why? Because when real estate is situated in the UAE, then everything changes. The place of supply becomes UAE, or any improvements to the real estate, or directly in connection with movable personal assets situated in the UAE at the time the services are performed. So, the if even movable personal assets which are situated in the UAE at the time the services were performed. So then it will become state sourced supply. So the place of supply will become UAE. The services are not treated as being performed in the UAE or in a designated zone under the place of supply rules stated in Article 30 uh, and Article 31 of the VAT law. Note that, the whole point is that the benefit of designated zone will not be available for services. Uh, Note the underlined word and in point A above that was previously or. Uh, okay. So, note the underlined uh, word and in the regulation is to reduce the number of instances where a service can be treated as zero rated. For example, in the following two scenarios, the person is not considered as being outside the UAE for the purposes of Article 31. What are those two scenarios? So in certain scenarios, for example, when a person stays in the UAE for a month or more, regardless of whether their presence in the UAE is effectively connected with the supply or not. So if the person is more than a month in UAE, then we don't think too much because he's violated already the 30-day rule. So he violated the 1 month rule. So more than a month, then that person will be seen as being, with being within the UAE. So this service cannot be treated as export of service. Second situation, when a person stays in the UAE for less than a month, but their presence in the UAE is effectively connected with the supply. Now, the person was there for less than a month, but the reason that he had visited was actually to maybe discuss about the aspects related to the supply of that particular service. If that is the case, then this person the whole point of this person coming to UAE was supply of this service, and he has so that means the condition is violated, and now it will be now this supply of service will not be treated as export of service. If the services are supplied to a non-resident and the services are actually performed outside the implementing states, or are the arranging of services that are actually performed outside the implementing states, uh, if the services are supplied to a non, so these are all these are all circumstances. If you look at A, B, and C. If this is where we started with regards to services, Article 31 of the regulation states that the export of services would be treated as zero rated in the following cases. The first case we just discussed, and then the second case that we are looking at is if the services are supplied to a non-resident and the services are actually performed outside the implementing states. These are performed outside the, or are the arranging of services that are actually performed outside the implementing states. Then there was a C, if the services are supplied to a non-resident and it consists of the facilitation of outbound tour packages for that part of the service. Now that's interesting. If the services are supplied to a non-resident and it consists of the facilitation of outbound tour packages for that part of the service. So the customer is a non-resident and the services are also outbound. So that obviously this will be considered as export services because the person is non-resident anyways. And the services are also outbound services, meaning that they're not inbound coming into UAE, outbound, going outside UAE. The FTA has issued public clarification zero rating of export of services, which is VAT P019, to explain the conditions of zero rating under Article 31 of the regulation. All the exceptions to the above, even if all the requirements under Article 31 of the regulation are met, the supply would not qualify for zero rating where Article 31 of the regulation apply. Uh, so there are like very strict conditions provided in Article 31. So if the one of the clauses, which is clause number 3 of Article 31 applies, then the supply would not qualify for zero rating. Thus, if it was foreseeable that the services would be received by another person in the UAE, including but not limited to an employee or a director of the non-resident recipient, provided the other person would not qualify for full input tax recovery under Article 54 or Article 57 of the VAT law. So, like a representative who was there, and so that representative also sometimes seen as a kind of a permanent establishment or fixed establishment of the non-resident person. So, this cannot be then seen as export of services. Any person who understands the concept of permanent establishment will understand this point. International transport of goods and passengers. Now, Article 45 of the VAT law states that the supply of international transportation of passengers and goods which starts or ends in the UAE or passes through its territory, including transport related services, shall be zero rated provided the conditions stipulated in the regulation are met. So Article 33 of the regulation provides that the international transport services of passengers and goods are zero rated if passengers and goods are transported from the UAE to outside the UAE or from a place outside the UAE to a place inside the UAE. So the transport of passengers by sea, air, or land taking place internally provided by the same supplier from a place in the UAE to another place in UAE as part of an international transportation from a place outside the UAE into UAE or from the UAE to outside the UAE. So even if there is a UAE leg of an international transportation journey, that will still be zero rated. The transport of goods within the UAE is also uh, zero rated if the services provided in the UAE by the same supplier as part of an international transportation from a place outside the UAE into the UAE or from inside the UAE to outside the UAE. The same thing, the transport of goods within the UAE is also zero rated. That meaning the UAE leg of that international transport of cargo goods, that it's the UAE leg will also be zero rated because that's part of the international transport. Certain goods and services uh, will also be zero rated if they are supplied in respect of the international transportation services of passengers or goods. Certain goods or services also be zero rated if they are supplied in respect of the international transportation services of passengers or goods. These include goods that are supplied to use for use or consumption or sale by or on an aircraft or a ship, services supplied during the supply of transportation services, the services of insuring or the arranging of the insurance or the arranging of the international transport of passengers or goods. So all of these are ancillary services to that international transport. So that is why they will also be zero rated. Now, supplies of means of transport, another interesting angle. Zero rating further applies to the certain supply or import of air, sea, and land means of transport for the transportation of passengers and goods. The zero the zero rating applies to the supply or import of an aircraft, ship, boat, or floating structure that is designed or adapted to be used for the commercial transportation of passengers or goods and which is not designed or adapted for recreation, pleasure, or sports. So, as long as it is for commercial transportation, uh, the zero rating shall still apply. It also applies to the supply or import of a bus or train that is uh, designed or adopted to be used for the public transportation of 10 or more passengers. It also applies to supply or import of a bus or train that is designed or adopted to be used for the public transportation of 10 or more passengers. The FTA issued a public clarification on public transportation in which it stated that a supply of a bus or train that is designed or adapted to be used for the transportation of 10 or more passengers, but designed to transport a specific category of individuals. For example, school students does not qualify for zero rating. It has to be a public transport. Cannot be like a specialized thing for school students, etc. Otherwise, it will not be entitled for zero ratings. Supplies of goods or services or the import of relevant goods related to the supply of the means of passenger transport and designated for the operation, repair, maintenance, or conversion of these means of transport are also zero rated. So, supplies of goods or services or the import of relevant goods related to the supply of the means of transport and designated for the operation, repair, maintenance, etc., or conversion, they will also be zero rated. With regards to goods and services supplied in connection to zero rated means of transport above, Article 35 of the regulation establishes that the zero rating applies to goods and services used in operating, repairing, renovating, modifying, maintaining, or converting those means of transport, except for fuel or other oil or gas products. Only the fuel and lubricants, etc., are not covered. Otherwise, everything else which is used for repair and maintenance, etc., of the means of transport, passenger transport, all of them are also zero rated, provided that either of the following takes place with regards to goods. The goods are incorporated into, affixed to, attached to, or form part of those means of transport. So if these were goods, then they become like uh, the spare parts, for example. So they become part of the means of transport. Or the goods are consumable goods that become unusable or worthless as a direct result of being used in the operation, repair, maintenance, or conversion process. So yeah, I mean, there are always supplies which, when you're doing the repair, maintenance, or upkeep work, they will be utilized and they will become useless. So if that is the case, these goods will be treated as zero rated. Now, what about services? In case of services, the following, which are supplied directly in connection with the means of transport, referred to in Article 34 of the regulation for the purpose of operating, repairing, maintaining, or converting the means of transport. So, those services which are utilized for operating, repairing, maintaining, or converting the means of transport. The services of repairing the means of transport, if carried out on board of the means of transport. Services of repairing the means of transport, if carried out on board of the means of transport. Now, interesting. Some services can be applied on board the mean of transport as well, like mid air or mid sea repair maintenance. The services of maintaining the means of transport, if carried on board of the means of transport, including the services of inspection and testing of the means of transport, its parts and equipment, cleaning, repairing, and other similar services. So now this is a slightly different one. Basically, it involves even inspection and testing, etc. So if these are those services which are going to affect the means of transport, then these will also be zero rated. The services of converting the means of transport, provided that after the completion of the conversion process, the means of transport continues to satisfy the cases stipulated in Article 34 of the regulation. So, if certain services were be there to convert the means of transport, and after that conversion, the original conditions of Article 34 of the executive regulation, which would ordinarily address uh, means of transport for passenger transport, etc. The conditions that are general conditions are provided. If they are met, then even those conversion related services will also be zero rated. Additionally, services which are supplied directly in connection with parts and equipment of a means of transport referred to in Article 34 of the regulation for the purpose of repairing and maintaining those parts and equipment, provided that only the following applies. So there are other services also, additionally services which are supplied directly in connection with the parts and equipments of means of transport. So there were certain services in connection with the parts and equipment of the means of transport. This whole article is for the means of the transport. Uh, so provided that any of the following applies, so certain conditionalities will apply. The services are carried out on board the means of transport, provided that any of the following. So if any service is provided on board the means of transport, or the part or equipment is removed for repair or maintenance, and it's subsequently replaced in the same means of transport. So it was, removed but put back again, and those services that were incurred in improving or correcting or repairing of that part, the part or equipment is removed for repair or maintenance and is subsequently held in stock for the future use as spares in the same means of transport or another means of transport. So, that part is still usable, it is still useful, and it is kept in the inventory for future benefit, so that those services will still be those services which are applied on that part to for repair or maintenance, then those services will be zero rated. The part or equipment could not be repaired and it exchanged for an identical part or equipment. So the part or equipment that could not be repaired and exchanged for an identical part or equipment. So in that case also the services that were incurred, they will be zero rated. That was all about zero rating of services for means of transport. Now we're coming to another topic, supplies or import of investment precious metals. So what are investment precious metals? Article 36 of the regulation establishes the zero rating provisions apply to the supply or import of investment precious metal in accordance with Article 45 of the VAT law. The VAT, gold, silver, and platinum are regarded as investment precious metals if the following conditions are met. The material is of a purity of 99% or more. Okay, that's the first condition. Highly pure, 99% or more purity. The metal is in a form tradable in global bullion markets. So it is traded in bullions. So if those are the cases, then the supply or import of investment precious metals would be zero rated. New residential, converted, and charity buildings. So the zero rated treatment of certain buildings is established in Article 45 of the VAT law, respectively, and the conditions and exclusions of zero rating are told out in Article 37, 38, 39 of the executive regulations. So everyone knows the first supply of residential buildings within 3 years of the completion, either in whole or in part, will be treated as zero rated. That's a famous case. The term residential building for VAT purposes means building intended and designed for human occupation, including any building or part of the building that the person occupies, or that it can be foreseen that a person will occupy as their principal place of residence, and specifically includes residential accommodation for students, school pupils, armed forces, police and orphanages, nursing homes, old rest homes, etc. All of these are residential buildings. The definition of residential building, that's an interesting part. It specifically excludes any place that is not a building fixed to the ground, which can be moved without being damaged. Hotels, motels, bed and breakfast establishments, hospitals and similar buildings, service apartments, hotel apartments and buildings constructed without local authorization. Therefore, such supplies will not qualify for zero rating. The first supply of a building or any part of a building which is converted to a residential building will also be zero rated, provided the supply takes place within 3 years of the completion of the conversion of the original building. So within 3 years of the completion of the conversion, so of the original building. So what happened, which is first supply of a building or any part of a building which is converted to a residential building. Previously, it was not a residential building. Now it is converted to a residential building. That completion, the date that conversion completes from that point until the next 3 years, it will be zero rated. And building or any part of it was not used as a residential building and did not comprise part of a residential building within 5 years prior to the conversion work commencing. That's a condition, right? Before conversion, no part of that building should have been used as residential. Additionally, the first sale or a lease of a building or any part of the building will be zero rated if the building was specifically designed to be used by a charity uh, and solely for a relevant charitable activity. Let's read again. Additionally, the first sale or a lease of a building or any part of the building will be zero rated if the building was specifically designed to be used by a charity and solely for a relevant charitable activity. Charities are defined as societies and associations of public welfare not aiming to make a profit that are listed with a cabinet decision issued at the suggestion of the minister. So there is a charities list that is issued by UAE cabinet. So if a charity is listed in that list, then and it supplies any building uh, for its purposes, so that supply will be zero rated first year supply. What about oil and gas? Now, supplies and imports of crude oil and natural gas are treated as zero rated. Oil and gas, crude oil and natural gas, not refined oil. Refined oil is standard rated, but crude oil and natural gas, they are zero rated. Now we come to education. The supply of educational services and related goods and services for nurseries, preschools, school education, and higher educational institutions owned or funded by federal or local government will be zero rated, provided the conditions within Article 40 of the regulations are met. Now, what are those, those conditions? The first condition for the zero rating of educational services is that the supply of educational services is provided in accordance with the curriculum recognized by the federal or local competent government entity regulating the education sector where the course is delivered. So the curriculum should be approved in simple words. The second condition for the zero rating of the educational services is that the uh, supplier of the educational services is an educational institution which is recognized by the federal or local government authority regulating the government sector where the course is delivered. So the body that is providing the services should also be recognized by the by the government. Additionally, where the supplier is a higher education institute, where the supplier is a higher education uh, institute, the zero rating will only apply if the institution is either owned by or receives more than 50% of its funding from federal or local government. Therefore, UAE branches of international universities would not qualify, despite having its curricula accredited by the relevant UAE competent authorities. Also, certain goods supplied by the recognized institution in accordance with the zero rated education services are zero rated. So let me read again. Also, certain goods supplied by the recognized institutions in connection with the zero rated education services are also zero rated. So there are certain goods which are being supplied. They will be zero rated if they're supplied as an extension of the zero rated education services, including books or other printed materials which are related to the curriculum of the education. Note goods and services supplied by the recognized educational institution that meets the criteria as Article 40 of the regulation, which are made available to persons who are not enrolled in the education institution will not be zero rated. Let's read again. Note that goods or services supplied by the recognized education institution that meets the criteria under the VAT regulation, which are made available to persons who are not enrolled in the education institution, will not be zero rated. Uh, those students who are not enrolled with the education institution, if you are providing services, if that institution is providing services to them, then that part will not be zero rated. In addition, uniform or clothing supplied by the supplier of education, food and beverages, electronic devices, recreational excursions, extracurricular activities for an additional fee, and membership in a student organization are excluded from zero rating. So many different types of things have been excluded. Uniform, clothing, you know, food and beverages, electronic devices, recreational, etc. All of these are not zero rated. Simple. Now, what was the rule about healthcare? I think it was the basic preventative, the supply of preventive and basic healthcare services and related goods and services, and the import of the concerned related goods will be zero rated provided the conditions of the VAT regulation are met. What are those conditions? Regulations define the term healthcare services to mean any services supplied that is generally accepted in the medical profession as being necessary to the treatment of the recipient of the supply, including preventative or preventive treatment. Therefore, a supply of healthcare services may only be zero rated if the healthcare service is made by a healthcare body or institution, doctor, nurse, technician, dentist, pharmacy, licensing of the Ministry of properly licensed by the Ministry of Health or by any other competent authority. So we're heading to the almost the last part of our chapter. The healthcare services relates to the well-being of a human being. However, where the patient and the recipient of the services are not the same person, the services do not qualify for zero rating. That's a very interesting angle. The FDA has issued a public clarification on business to business supplies of healthcare services, B2B, VAT P016, which, which explains that, for instance, a doctor who has contracted with a hospital to see patients who visit the hospital in providing services to the hospital, not directly to the patient. So that doctor is providing services not to the patient but to the hospital. The doctor services, which are business to business services, are subject to VAT at the rate of 5%. So that's a key point. B2B are not zero rated. Under healthcare, B2B services are not zero rated. It's standard rated. It is worth noting that the following are not treated as healthcare services, thus will not be treated to the zero rate as healthcare services. What are not healthcare? Any part of the supply that relates to staying in, attending, or establishing the principal purpose of which is to provide holiday accommodation or entertainment, such as any healthcare services, is incidental to the provision of the accommodation or entertainment. Anything that is accommodation or entertainment and not healthcare, that will not be covered in the definition of healthcare. Effective treatment for cosmetic reasons. Cosmetic reasons other than prescribed by a doctor or medical professional for treating or preventing or prevention of a medical condition. Cosmetics are not covered under the zero rating in simple words, unless it is basically preventive health. healthcare services. The supply or import of any pharmaceutical products or medical equipment identified in a decision issued by the cabinet or uh, any other goods which are supplied in the course of supplying a person with zero rated healthcare services that are necessary for the supply of such services will also be zero rated. So even the medical equipment and goods that are necessary for zero rated healthcare services will also be zero rated. Uh, Cabinet decision on medications and medical equipment subject to tax at zero rate was issued, in which zero rated medications and medical equipment are defined. The zero rate only applies to medications and medical equipment registered as such with the Ministry of Health and Prevention. So there's a detailed decision issued for imported with permission or approval. So that decision provides details on what shall be construed as zero rated supply, healthcare supply. Detailed provisions note that when considering the items within these supplies, it's important that you fully read all the notes, the VAT law, the regulation, all other relevant cabinet and ministerial decisions, and any guidance or clarification issued by the FT. Some of the provisions are very detailed, and some rules include a number of exceptions. So that's about it. This was on the this was basically chapter 5, and the whole point of chapter 5, the whole scope of chapter 5 was addressing the zero rating of goods and services. So we'll meet in chapter 6, inshallah. Thank you.